Welcome to the Forex, and here we're looking at the US dollar, and look, as you know, that support at 79.50 that we're looking at is finally broken, and it had broken through, well, both of these old supports here, and it still has further to move to the downside. So you can see here that we've got wave 1 here, wave 2 here, and we've got wave 3 unfolding through here. The market's going to try and retest these old levels here at some stage, probably off the 79. It probably won't get all the way back because we can see the strong third wave in here. So if we start to look at this structure through here, but just before we do that, this structure would end up down at the 78 area down through here. So this is strong for commodities, and of course the euro and the other currencies that are crossing in that particular direction. So in this case here, we can see on the 1 hour, we can see that we have wave 1 to here, wave 2, then wave 1 of a smaller degree, then smaller degree 2 here. It spiked a bit, but it would have normally been up here. But you can still see it, the 1, 2, 3, 4, 5. It's still got further to unfold down. That's the main thing. The bounce off the 79, as I mentioned, shouldn't go too far back up towards the 79.50 area through here, because it would only be a wave 4, and so probably max 79.30 area, but probably 79.20 area before it moves further down. The obviously gives the euro a good move to the upside. So in looking at the 4-hour chart here, one of the charts we've been working off, we were looking at up for wave 1 here, and we've been working through this particular correction here as a excuse me, as an ABC correction. And then, as you know, we've been working up for wave 1, back for wave 2, and continue the buying basically. And well, look, we're in wave 3 at the moment, and that should take us up to the 140 area through here. Just before the 140 area, there's an old high as well. But the bigger picture, if you can imagine that this is wave 1 through to here, then the ABC for 2 here. The wave 3 here is going to take us, up into this area up here. So the long trades that we have in here will continue to hold through and accommodate any swings that will come into play from 139.72 to 140, and even above here as well. So group 1 above and group 2 below here will be the range that will see the market swing in across the 140. But the moves are still to the upside, so be looking at maybe 144 or something, 143. We'll look at the extensions a little bit later on, but just drilling into this here. This is where we were sort of looking yesterday. We were in here, and we're looking for a wave 2 to pull back into this area here and move up. So we're looking to be long above the 138.72 area here. You should be long there. Hopefully you're long in a few other places. I just continue to buy on pullbacks, but get an idea of where the wave count is. So we've got wave 1 and wave 2. Wave 3 will take us up into close to the 140 area here. But as mentioned on the daily, you can see old highs in this area here as well. So it will struggle a little bit into the 139.80, 139.72 sort of area there. But yes, wave 5 here should bring us, wave 5 should be roughly the same length as this, but I wouldn't pay too much attention to this because it was a spike. But the main point is that, wave 3, wave 4, and wave 5, it's just a matter of not over trading and holding through all of this. The Australian dollar, looking at it on the daily chart here, it's, we've got 2 counts on this. One's the 1, 2, 3, and back for 4 and up for 5, which I've always liked. The ABC, of course, which we need to keep on the page, is the A wave to here, the B wave, and the C wave to here, and completing here, and then folding over here. So we were looking at that, and still are looking at that, because this countdown through here could be counted as 5 waves. So if that's the case, then we'd pull back to the 50-60% retracement level in through here and fail from this point, and then continue to roll over. But the US dollar being the way it is, we could see further upside through here. So look, once this the other interesting point here is once that high gets taken out here, they were 94.60, I think it was, or something, 94.60, yeah. Then that would give us 5 waves up, and that's really important because if we've got 5 waves up from the low here, then that puts this whole market, the Australian dollar, into a bullish market, because we would get 5 waves up through to here, then we'll get a counter trend in 3 waves, and then we'll get another 5 up. Because we got 5 here, that means we'll get another 5 over here, so that would take us up to the $1 mark. So it's quite an important point, this sort of where we are now. But look, drilling in here, what we were looking for, what I was looking for yesterday is we knew that we're going to be moving up and we can go long, and the RBA had their rates announcement, and the bias was that it wasn't going to be changed, and that was correct. So we're looking to be long in this area through here. But as a corrective rally to the upside here, this would be the A wave and the B wave here, and then we'd be looking for 5 waves in the C wave, which would be 1, 2, the top of the third's in here now, I'd say. Yep, so the 4th wave, and we can still expect a 5th wave up through to here, close to the 94 anyway. So that will give us wave C, but it can also be a bullish pattern as well as wave C. But in both cases, we're going to see a reaction from the 94 back into group 2 and possibly 93.50. So we need to understand what this move is here. If this move is impulsive to the downside, well, then we need to look for short trades, for longer term short trades. If, however, it is corrective coming down here, and we can confirm that it is corrective, then we've got a bullish pattern on our hands in the bigger picture as well, which is really important because there's traders there that still have long positions trading the monthly to the upside. So important. But look, anyway, as far as this goes here, we can look for this may even push up through here, but the main thing is we're looking for a wave 3 and 4 correction, a corrective pattern in this zone here. It won't come back that far. It could come back to this point here, to the 93.30 tops, but we'll keep our stops under this for the time being, and look to move up to the 94 area, and it's sort of moving with the euro, so you can bring that into the fold as well. And the US dollar is going to get a bit bouncy, and it's going to find support around the 97, that's correct, and the euro around the 140, and the Australian dollar around the 94 area here as well. So do what you will with that, but we need to, just getting back, we need to work out what this pattern here will be. Understanding that will give us the key to the next higher direction. The Euro Australian is a little bit weak here, so I just want to go over the bigger picture here. So just on the daily here. So first of all, we were looking for an A and a B and a C for wave 4. It was a little bit small for an intermediate wave 4 as such in all of this. So we've held the door open for a possible larger count to the downside, and that would be 1, 2, 3 here, 4 to here, and 5 to here. And if that's the case, then that would just make the A wave to here. Then we would see a B wave over here, and then we would see a C wave down here a little bit further as the wave 4 here. So that's kind of what we're looking at the moment. And, this move that's coming down through here, it can't be confirmed as bearish yet, but as I mentioned, being under 149.39 was the trigger to be short, or even the 149, and we're under that at the moment. And we'll watch that develop. But let's have a closer look at that as it stands at the moment. So we were looking at an ABC pattern up here for the wave 4, and then we're looking for down for wave 1, because we always held this in 5 waves here. So we see the A, B, and C coming back into this area through here, failed to find support up there. And that's moving down. So really we wanted to move down below this one here, but we could also understand that the move down through to here would retest the 149 or thereabouts, and then move lower again as well. So I don't have a very clear impulse wave to the downside, but it's certainly looking like that as such. But we could also even get a move to 148 here, and then a bounce back up as well. But I think we're in a bearish picture, so if you're short, that's good. Look for the retest at 149. The pound yen, have a look at that. Okay, the pound yen, I have to use a different charting program here, but look, the pound yen, what we were looking for yesterday, we were looking for a three-wave move here back up to the 61.8 retracement level, which is up at the 172.72 and the 172.80 up here, and we're looking to sell short from up this area through here, and the market has moved down through here, and this move down through here, if it is impulsive, then we'll see a corrective bounce here, also pulling back up 62% of the move down through here. That will take us back to the 172 70, 72 sort of area in through here where the supply is. So we're looking for a move up into this area through here, and then failing at that point and moving down. Now, all that said, this move from the low here, we can count this up through here in three waves here, but until it overlaps the top of this little area here, this top of wave 1 here, yep, then this market can still produce 5 waves to the upside in terms of 1, 2, 3, 4, and 5 to the upside. So what we need to see is we need to see a move come back up into here, retest it, and then move down through here. And then that would give overlapping wave structures in this case here, and it would make this move here in 3 waves here, okay? So we need to confirm that we've got 3 waves here. So we need to see a move down through here to do that. And in doing that, this move currently down through here, we would need to see that, well, it's retracing now, and then we'll need to see it move down through here. So you would need to keep stops above 172.83 here if you're on the short side. And this is the same for the euro yen as well. From the 142 area here, we're looking for a short yesterday and to sell weakness, and that's fine. The move down through here appears to be impulsive, so we can look for a retracement level coming back up to 141.72 here and the 141.80 area through here. Essentially, this block here will be the first level of resistance through here. It could come higher up through here if that's going to be the case. So if you've been shorting from this area through here from yesterday, then you'll still need to keep stops well out of the way above the 142 there, 142.11, or at least just above the 142 there. So we're looking for this to move up through to here and fail from that point and move further down from that point. Alrighty, well, that's it. So it's just to recap a little bit. The important thing is that the US dollar will find support close to 79 in Group 1 and also at 79. Have some bounce there in some sort of wave 4 and then continue to move lower through there. The main trend is down. We'll just see little bounces along the way, but it's important to understand those because they'll reflect back into whatever market that you're trading here to one degree or the other.